What's up? What's going on, everybody? Happy Saturday. These are very good if you have not tried them before. Oh. Hey, Alex. Welcome back to the stream. Thanks for the support. Good to see you. Bitcoin is over 100K yet again. Quite exciting. I don't have a huge agenda for this stream, so feel free to ask questions. Just here to hang and chill out for a little bit. Hopefully everybody had a good week. Do you? I just stumbled across them for the first time a few days ago. I didn't even know they existed. I had no idea Monster made like wine coolers. I don't normally like Monster energy drinks. I haven't really drank Monsters since I was a teenager, but these taste, for 6% alcohol, they just taste like juice. And they don't have the energy stuff in them, so gets the job done. Very effective, very delicious. Don't forget, guys, hit that like button if you have not already. I do appreciate it. That's the way YouTube works. That's how other people can find the stream and have a good time as well. Also, let me know if my volume's good or if I need to crank it up or down. Or, you know, music as well, not just my mic. There are a couple things I want to talk about today regarding the market recently. Obviously, we've got Bitcoin up on the screen right now. Again, Bitcoin over 100K, which is very interesting. Very interesting. And I will just go ahead and flip the view here. Let's do this. I will go ahead and do this so we can talk about this a little bit, because this, like I said, just very interesting when you look at the recent price action here. And let's go here, right? All right, so here we've got Bitcoin, right? And we know how this works. Mental resistance level at 100K. If we can hold above 100K, and by hold above, I mean we clear it and we stay there. Maybe we bounce off of 100K a couple times, below, above, whatever, a few times, and then comfortably trend above that and not keep dipping down into the 99s and below. Very good. Very, very good for the long-term trajectory, and even the short-term trajectory of Bitcoin. Why this is very interesting is if we go into a shorter time frame here, you can see exactly what happened. So we finally, broke above 100K for the first time on the 5th. And from this candle here, you can just see it was a massive move, a lot of momentum, a lot of volume. That's very clear. Once we broke above, we went all the way up to about 104,000. And we held above for just a little bit. But as we went to go test 100K, oh, music's a bit loud. All right, let me just turn it down a little bit. Let me know if that's good. As we went to go test 100K, we did not hold. Very clearly, you can see here. This red candle went all the way down. And this is over the course of, this is a 4-hour time frame here. So over the course of 4 hours, we started off here. We made it all the way down to here. And then we bounced around in here a good bit. And long story short, we closed out under 100K, which is not great. We did not hold support at 100,000. And after that, there was a big sell-off. Obviously, this is a little bit of manipulation or whatnot. This rejection wick doesn't really matter. And then we consolidated. We broke above 100K again. Okay, then we fell back below 100K yet again, back to 99. But as you can see here, we are trying to test this 100 level and determine if it's going to be the ceiling or if this is going to be support. So the fact that we went under to 92, held at 97 for quite some time, cleared it again, went under, held at 99, and now we're back above 100K again. That just tells us that there's quite a bit of buying pressure. Obviously, there's a little bit of profit taking as well, but there's quite a bit of buying pressure because this is now the third time that we've gotten through that hard 100K resistance level. And so you can see here, if you're just looking at the price, $100,097. We're not in the clear by much. Really, big picture, we're not in the clear at all. But it's going to be very interesting just to see how this plays out here. And I think the next couple days are going to be very important. Because even as you can see here, if you're looking at it from a patterns perspective, we're forming a bit of a triangle. And the triangle really just means as time goes on and things start to consolidate in this tightening range here, back and forth battle between the buyers and the sellers. And there is no clear direction of which way we're going to go yet. So we are approaching the moment of truth here, and it's probably going to occur at this rate by the end of, well, if we just finish out the triangle, this closes by the end of basically tomorrow. Right? Is today what's today's date? I still don't. Yeah. So by the end of Sunday. So come Monday, we should have a pretty good idea of where we're headed. Very interesting. Now, I want to talk about Dogecoin for a little bit, because we know that altcoins tend to follow Bitcoin as the market leader. However, when you look at Dogecoin's movement compared to Bitcoin, you see a little bit of a different story here. What you see is like a double bottom formed, and then a triple. This is not a very clear pattern, by the way, so there's not much to take away from this if you're trying to map things out. But what you could do, what kind of makes the most sense, would be draw a line like this. All right, and then, hang on, I kind of need to try and make some sense of this here. If you're just trying to envision what pattern is kind of getting formed here, there's not much, but you can see that we're trending within this channel. It's an ascending channel, we know that much, and it is tightening, but very slowly. So this is interesting because it's worth noting that Dogecoin is not following the market leader at this point. Dogecoin's kind of doing its own thing, and usually in a neutral market, kind of like you would think it is right now, there's not a whole lot of announcements, positive or negative. There's just some hype around what's going to come next year with the crypto market. Usually you would expect Dogecoin to just be trading sideways or doing whatever in the world Bitcoin's doing. But we'll go back just for reference. You can see that these look nothing alike, honestly. I mean, maybe you could make the argument that it's right here, but it's not as similar as it usually is. Dogecoin has way more upward potential at this point in time. If you really just focus here on the way this looks, and then you go back for reference to here, you can see that we are actually looking to break out short term to the top side, and it's going to take very little market positivity to get us there, because we're already basically at resistance trying to test that when Bitcoin is over there in the middle of a triangle. Not looking like it has a bias in which direction it's going to go. So all that to say, if Bitcoin does decide to hold above 100,000 here and we start heading back towards 102, 103, 104, expect Dogecoin to really take off because it is not going to take very much for it to break resistance, which is then going to spark a whole lot of momentum from breakout traders and everybody else that's sitting on the side, a lot of FOMO buy-in. But then what's even more interesting is we are also very, very close to the mental level of 50 cents. All right, we're only about 3.5 cents away from 50 cents here. So if Bitcoin continues with the momentum that we can clearly see from the chart here that Dogecoin already has, and then, that's going to easily take us to 50. And if Bitcoin really keeps going to, let's just say, above 104 and heads towards 110, 115, with this momentum that Dogecoin already is, or with this tension that it's already starting to build up, it's going to be very easy to kind of slingshot from here to here. And once we clear here, a lot of people are going to be like, oh, Dogecoin's over 50 cents now. and they're going to FOMO buy in too. And that's just going to spark a whole snowball of momentum to the upside. I know that was long-winded, but essentially what I'm trying to say here is if Bitcoin holds above 100K and starts to trend up positively from that, when Dogecoin follows, it's going to break through a lot of key levels that are going to spark a whole lot of momentum. And I think we're going to see a lot more volatility coming from Dogecoin in particular compared to something like Bitcoin at that time. And that's really, I mean, we're right about here. If you look at this from the weekly chart, or I mean, we could even go a little shorter time here and go to something like the daily. Actually, let's do max. Here we go. Alex says, yes, sir, I'm very bullish on Doge right now. Yeah, I mean, I'm not personally holding any Dogecoin at the moment, but, and I'll talk about what my portfolio is at the moment, but I mean, just looking at this is crazy. There is a lot of potential here for a move. Very bullish as well on what's about to happen here. So if we look at this from the daily, you can see here that we are already, I mean, just look here, this last peak, this spike here of resistance, which is not very significant. I'd say if anything, this 45-cent level had a little bit more going for it, and even this 39, 40-cent level, but this last resistance was right here at about 46 flat. And we are currently trading above that and doing an okay job of holding above it as well. So, I mean, it's all systems are go at this point. Everything's pointing to positive movement. And then there's not really anything above that you can see from a daily chart. And obviously people are going to start looking from these zoomed out longer term perspectives when we start looking at higher price targets that we've only hit many years ago or months ago. And so, well, when was this? 2021. Yeah, many years. And so that leaves us with 50, let's see, what do we have here? About 53 to 55 cents, really the next stopping point right here after 50. And then we go up to about 60, and then we have 70 and 70, about, we'll just call it 75, which was pretty much the all-time high, about 74.5 cents. And these levels are obvious, but I'll still just mark this out here. This is really all people are going to have to refer to. We'll just call it right there in the middle. So again, when Bitcoin moves up, if it moves up, we break out of this triangle right here. Not much to make note of right here. So as long as Bitcoin's still looking strong, we'll clear this 48-cent mark, head towards 50. That's going to be the big take profit point for Doge. So just keep that in mind. If Bitcoin shows weakness at a time where Doge is at 50 cents, Doge is going to pull back pretty hard. But if Bitcoin's looking strong, that's going to give Dogecoin enough buying momentum and pressure to push through that level, which is then going to allow it to slingshot off momentum up to the next level, which is about 53 to 55. And then from there, if we are able to clear that, depending on how Bitcoin's doing, there's really nothing in our way to head up to 60. And then after 60, I mean, there's really not much to make note of until we get to about 75 cents. And then once we clear 75, there's nothing at all up until we get to $1. So lots of positive ways to look at that. I like a positive outlook. So that's great for you Doge holders. As you know, I'm a fan of Dogecoin myself. Very glad to see it finally taken off. And who knows, I need to plug in here. I might end up buying back in, but it all depends on how my current investments play out. If they hit price targets that I'm expecting them to hit, and Dogecoin's still looking like it's at a reasonable buy-in price, I'll go ahead and switch over. But at this time, I've got some other investments right now that are taking a little bit more priority. And I'll talk about those here in a second. What I need to do is keep my Mac from dying so the stream doesn't cut off. So give me about 2 seconds. Alex says, bought in during the bear market. Oh, that's good. Very smart. What was your buy-in price? Just curious. What's your average right now? Oh, man. All right. The day has been saved. Don't forget, guys, if you're new to the channel, feel free to click that like button. I do appreciate it. Also subscribe. I try to go live at least a few times a week. And then also follow me on x.com. That's where I'm the most active. You can ask me questions. You can view my trade alerts for free. I don't have any kind of subscription or anything going right now for any of that. There's nothing hidden behind a paywall. Just click follow and you are good to go. I'm trying to get to 500 followers. I'm about 35 or so off right now. Very close. And at 500, I'll be able to begin getting paid for some of my posts. So that'll be great. Definitely appreciate the support. And if you're here from x.com, because I am live over there as well, good to see you. Also, you can feel free to comment because that will pop up here in my feed. I've got both synced, as long as it's working right. All right. Let me see. I want to pop open the live stream on X just to make sure I'm not missing any comments. So there we go. All right. Average is 12. Wow. Yeah, that's great. Really solid. Okay. Don't forget, guys, feel free to ask questions. I will go ahead and move along though. So something I definitely want to talk about is the stock market right now. As you can see from the thumbnail, and I'm making my thumbnails, by the way, just like account updates because I am trying to grind to 1 million. All right, and started off on this account, really started taking this account serious at 3,000. And this was not very long ago at all. Just a couple months. Started really taking it serious right around wherever it bottomed out here. Yeah, it was around October. All right, and we started at a little under 4,000, about 3,900. October 20, we'll just call it October 20th, and here we are. It's not even December 20th yet, and we're up from 3,900 to 16,700. Friday, this is from Friday, obviously, because the market's closed on Saturday, but we saw a $2,000 gain, 13% of the account on Friday alone, which is awesome. And it's not magic. It's just doing a lot of research and making sure that I'm in the right stocks at the right time. And again, that's why I say follow me on X, because I share a lot of that information there if you're not in my Discord group. So that's the next best place to go to get it. What I do want to go over, though, is what that portfolio is and what are these stocks or assets that are causing the account to skyrocket, and what do I plan on doing next, right? So my portfolio right now is pretty simple. I am mostly, and I don't usually use the desktop version here, so forgive me for stumbling around, but I am mostly in Tesla, and my biggest, I'll say my top 3 right now that are causing the account to move is Tesla, Archer, and Stellantis. So I'll start off with Stellantis because that one I think is the most interesting and it's the one not talked about very often. So Stellantis, if you don't know, is the parent company of, well, like Dodge, Chrysler, Jeep, Ram, all those companies. They also own Fiat and some other brands that I forget, Vauxhall, right? And some others. Anyway, the main focus here is Dodge. That's the one that I'm caring about right now because Stellantis has not been doing very good this year. Now, I'll talk about why really quick. So Stellantis' whole thing recently has been trying to transition their whole fleet of vehicles for all the brands that they own. So think Dodge, Jeep, Ram, trucks, all of that. Trying to transition all of their fleet to electric. And they've been pushing very, very hard to do that. The problem is EV adoption in general has not been very positive unless you're a company like Tesla. So a lot of the EV only companies like Lucid and Rivian have been struggling a bit recently. And then companies that don't do EV only that are trying to switch, their EV sales have not been great. Now, there's some companies I think like Toyota, well, I don't even remember the company names, that are doing okay with their transition, but Stellantis really is not one of them. And I mean, when you think about it, if you're going to buy a Dodge or a Chrysler or a truck, you're probably not really the kind of person that's particularly looking to get an electric vehicle over fossil fuel powered. So, I mean, it's just, I don't think it's targeting the right demographic, of the right kind of customer. I don't think they have the right brands to really be the one pushing that hard to do that. Regardless, though, I mean, it's their strategy, and they were given, you know, the cutoff date for when vehicles need to be X amount fuel efficient, or you have to have a percentage of vehicles that are electric, whatever that mandate specified. I don't recall, but they've just been trying to aggressively push towards that. However, the market has spoken, and the market does not like that. All right. So if you look at their stock price, now keep in mind they acquired Dodge, and Dodge with the V8 power and supercharged vehicles. I mean, those were just selling like candy. So recently, especially going into like 2021, 2022, 2023, into early 2024, and especially I'll say 2023, they were doing very, very well, and their stock price was going up pretty significantly, as you can see here. And I will switch the view back to this, so I'm not completely in the screen. But it was going very well, right? Now, you can see right around here, they peaked at 28.30 in March. And ever since then, they've been selling off hard, and they went all the way back. They gave away 2 years worth of gains here in months. So there's a couple reasons why I think this is a potential buy opportunity. One, I mean, this and this is not equal. This seems like an oversell off, but when you really start to investigate and do some research and put together a fundamental analysis, you start to realize, well, maybe as it is right now, this is not an oversell off. This is warranted. And the reason being is they decided to discontinue vehicles like the Dodge Challenger, the Dodge Charger, in its current form with the V8s and the supercharged V8s and, you know, all their muscle car lineup. Got rid of it, and they're like, we're going full EV with all those vehicles. The problem is no one wants that. No one wants those. No one wants an electric powered Hellcat. No one wants an electric powered Scat Pack or whatever other model that you were looking at. And the market's speaking, no one's happy about it. They think the new Charger's ugly. I think it's kind of ugly myself. They certainly don't want to buy it. And the vehicles are expensive. So the market's speaking, they're not interested. They don't like it. And I think that's a big reason, along with just poor EV sales already with their other brands, that Stellantis is selling off pretty significantly here. Now, the reason why I hold this and I think it's a buy opportunity is because obviously they know this. They recently have made some comments about it. The CEO, actually, of Stellantis is no longer. They're now looking for a replacement CEO for the company. So things are about to change because they have to get, they have to switch things up to please their shareholders at this point because things are not looking good. They're about to head back down towards all-time lows, which is, you know, they have not really dipped far below $10, and currently we're at 13. So, I mean, there's not much room to go down beyond this before everyone's losing on their investment, and that is not acceptable, especially when this really started back in 2014. All right, so over 10 years, you're barely up. That doesn't work for people. So they're going to make some changes. Now, with the new government taking over early next year and their stance on electric vehicles and mandates, and we know that Trump has already expressed his disliking of the EV mandate. He doesn't feel like anyone should be forced to switch to EV. And Elon Musk, who is also now directly affiliated with the government, he also thinks that the EV tax credit is a waste of money. So if we just say with both of those things potentially getting removed sometime next year or 2026 at the latest, that's going to give Stellantis the perfect opportunity to do what they need to do in order to get their stock price back up, which is bring back the high-performance gas-powered muscle car. That's really the only thing they can do right now in order to save their stock. It's just a very clear potential forecast here. A very clear picture gets painted of what's probably going to happen. So with all those things in mind and not a whole lot of time left before those things probably start to take place, I believe that this is around the bottom of where we'll see Stellantis, because I think they're going to start announcing what their significant changes are going to be very soon. We already know from doing some research that they actually expedited the release of the gas-powered charger, because it does exist, but it's going to be with the V6, and it's called the Hurricane. Let me just pull up an article here. So they were originally planning to start selling the gas-powered charger later in the year, next year, and they were really going to focus on... There's no way these are already being sold. They were really going to focus on trying to push the EV model first, and then after some time release the gas-powered one. But due to demand, the lack of demand for the EV, rather, they are moving the gas-powered chargers release up by at least 5 months. And this was a speculative article, but since then there have been confirmations. So that already tells you what they're starting to deduce from the market. And that's that there's a demand for the gas-powered vehicle. And that's what they need to be focusing on, because the EV demand is just not there for them. So again, it's just starting to become very obvious what's going to happen and what they're going to have to do. And so with all those things in mind, I mean, just knowing that the gas-powered muscle car is what kind of got them from 12 to 28, and getting rid of it took them from 28 back to 12. Well, if they're going to bring it back, common sense says, well, we'll probably eventually head back up to 28. And again, we're now back at around 12. So now's the buy time. That's the very simplified analysis. So that's what I'm looking at. And so I bought some calls right here. Actually, I got very close to the bottom. I think I'm in at about 1250 or 1275. And I bought 7 contracts, and I'll just be transparent here. 7 contracts of the Stellantis $13 call, which is a solid strike price because it's a 2027 expiration date. So of course, buying that close to, basically buying very close to in the money at the time, and 2 years out, this was a relatively expensive premium for the option because it was a very solid call option. However, this is really, I think, going to pay off here, because even if I just go to simulate my returns, let's just say that the price goes something very, very reasonable, and let's just say they announce that they're bringing back the vehicles, people start to buy back into the stock once people know that they're bringing back the V8 powered muscle car. I assume that we'll pretty easily get back to the, let's just say, $17 to $20 range. Now we're already up about $3,000 on a $2,000 investment. So that's up 100%, right? Because I didn't pay much more than that. Yeah, I paid, I think, $2,000 flat. So that's already doubling the investment. If we just get from here up to about 17 bucks, very, very good. But if we start to head back towards all-time highs, so let's just say anywhere from 25 to 30, then we're up 400% or 4x on the initial investment before we even hit $30. So that's right here is about 5x at 30. So it's a very low risk, high reward potential opportunity here. And being 2 years out on the expiration of this, or I'm sorry, yeah, about 2 years and a few months, there's plenty of time to reevaluate and potentially sell this call without really even losing anything. So to me, that's just a very safe bet. That's my plan there. Alex says Doge starting to move back at 0.472. Let's go check that out. Oh, Doge sure is starting to move. Wow. Now, I'm curious here. What's Bitcoin doing? Okay. Bitcoin's actually trending down. Bitcoin's trending down, but maybe people are looking at this 100,000 level and they're just seeing some support being found here. Yeah, this is really interesting. Now, Bitcoin, I don't know what's going to happen here. I mean, there's a lot of stability here at this 99,000 level. We might be in good shape because you've got a pretty strong, I mean, double bottom here, double bottom overall. You've got this very familiar. The only thing I don't like is this massive long trend down. That selling I mean, this just shows really lack of buying pressure for some reason here. But we'll see. We'll see. There's nothing to overanalyze here, but there's just a little bit of weakness right here. You see all this red, and we're not seeing like a healthy up and down. It's just down. So we'll see. But the fact that there's some deviation from Dogecoin, that's definitely a sign of strength. And this might be on its own tear here momentarily. So that's one play. Stellantis, and not up big on this so far. But, you know, once I bought in, it actually trended down a little bit. But the Stellantis price action is finally starting to trend up a little. So I bought in, like I said, around 12. Now it's at about 12.75, we'll call it. Now it's about 13.75. I've made overall 7% on that here within a very short period of time. I think, okay, I bought this on 11/19, so it hasn't even been a month yet. And I'll take 7% in a month. Most people are going for 4% a year. So I think really, really positive things are coming here. I would recommend this if you want to do a more speculative buy on something. There's not a whole lot of downside potential. It's not like I have any concern that they're going to go bankrupt. So I don't think there's much downside here, but this is one of those plays that people are not thinking about very much. So I think right now, if you're looking for a buy at the bottom of something, this is a good potential idea. It's an idea. Not a financial advisor. This is not financial advice. Please keep that in mind. All right, the next one is obviously going to be Archer Aviation. So we'll go ahead and pop over there. Now, I started talking about Archer a few months ago, and I was talking about it when it was at the $3 level, and it was in between $3 and $4. And that's where I ended up buying in at close to about 4 something. And as you can see here, guys, this was $3 on November 6th. And by November 29th, it had gone up over 3x. Pretty significant. And now I will say Archer is getting close to its price targets. So this was really a long overdue move. So I'm not just saying right now it's just a buy, because you have to just respect what people are going to be thinking about the valuation of this. At $3, it was significantly undervalued, but now it's getting closer to what I'd call a fair value price. So we're no longer just at like a bottom level. So you have to keep that in mind when you go for a buy, that there could be a lot of downside potential if there's a pullback on fear or anything else because of that, especially because it happened so fast. People are not going to really think of $8.20 as the new bottom. Not yet. It needs to establish itself. It hasn't been long enough. But Archer Aviation and Joby Aviation are really two big plays. Archer and Joby both for the same reasons, and that's because really the next big thing in transportation is going to be flying over the vehicles on the road, because that's really the most efficient way to get beyond traffic in congested areas. So basically what these companies do is they produce air taxis, electric air taxis, that look like large drones. If you've ever seen a drone being flown around, look like larger versions of that, kind of like that mixed with a helicopter. And they're almost like helicopter plane hybrids that are meant to just take a few people at a time. And essentially, long story short, the end goal of this is to basically have like an Uber-like service where you can take very short 10, 15 to 25 mile trips via a flying vehicle that resembles a drone / helicopter. And that's really going to be big for people that live in congested areas, again, like New York, like California, and plenty of other places where taking a vehicle a lot of times just does not make sense. And if there was any other alternative, you would prefer that. This is going to take 3-hour car drives and cut that down to 30 minutes. And it's going to be relatively affordable to do so. So this is really an industry that not many people know about, but it's going to be big. And another, I'm looking for as many catalysts as possible when I figure out what my investments are going to be. And Trump has talked about this industry recently. During his campaign towards the end, he was talking about eVTOL vehicles, which is electric vertical takeoff and landing. And that's what these vehicles are technically called, eVTOL vehicles. He talked about that and building out the infrastructure and supporting it. So, and he said specifically companies that are based in the US, and the two big ones that are based in the US are Archer and Joby. So for those reasons, that's why we're investing in Archer and Joby. Now I will say, looking at market cap, because this is something to keep in mind. Okay, we won't go there. Stock market cap. There we go. Being that these are the two big players here, it becomes very beneficial to just look at both of their market caps and compare to figure out what a fair valuation for each is, because they're essentially doing and accomplishing the same thing. So Archer now has a market cap of 3.5 billion. And Joby has a market cap of 6 billion. So that tells us that if all things were equal and the same, that Archer still has potential to 2x if we think that Joby is at a fair valuation. And so that means Archer, if it's $8 right now, it could probably get to about 15, because it's not quite 2x. It could probably get to about 15 or $15, and then it would be matching exactly the valuation of Joby. So there is still some more upside. For that reason, I'm still holding. But if you're looking for a buy, I would just be sure to DCA, because we are at a point where we're not necessarily at a strong support, but there may be a lot of interest in continued buy pressure. So you have to keep that in mind. You don't want to miss a whole move potentially, but you do have to trade smart when we're kind of up in the air. Now, the only thing I'll say is there's a little bit of hesitancy from me when it comes to Archer, because supposedly on December the 20th, which is only about 2 weeks from now, they're going to be holding an event where they're going to discuss doing offerings and increasing the amount of total shares that they have at their disposal to offer in the future. That is not necessarily a positive event when it comes to the stock price. We know that anytime that an offering does occur, that means shares are getting diluted, which means your shares automatically become worth less, as they represent less of a share of the total company. So with that in mind, I do expect that going into next week, so that's going to be like the week of, we'll just say the week of about the 15th, that week from the 15th to the 20th, or sometime around there, well, maybe even from the Friday prior, so like the 13th to the 20th, that we will see some downtrending from Archer, if not sooner. But if you're looking to do a buy-in, I would just maybe hold off. Just be careful. Consider holding off until after that event. unless you see a really good buy-in opportunity, because there could be some volatility and a little bit of fear around that. Joby, though, doesn't have that same concern, but again, they are double the market cap, so value-wise, Archer's cheaper right now. All right. So that's Archer and Joby. Now, I do also want to talk about Take-Two Interactive, because... hang on. I'm struggling here to just find the easy way to see everything that I have, and it's kind of frustrating me. Robinhood's supposed to be easier to use than this. Am I missing something? Like on this investing page, it should just say everything I'm investing in, right? It says my options here. Maybe I don't have any stocks. I don't recall. All right, so anyway, and you'll see here, I've had this put. This is not a great put, but I've had it for quite some time. So I'm just going to hold it, see what happens December 20th. 28 puts. It did not cost me very much money because they were cheap. And so, yeah, what, $200 or something? 300? Not significant. All right. And then I want to talk about Take-Two really quick. They have been moving up quite a bit here, but the price isn't too bad. And the real reason that I have this on my watch list is because Grand Theft Auto 6, this is the company that owns Rockstar Games. And GTA 6 is probably going to be the highest, most successful, highest profit, best-selling game of all time. And I believe that Take-Two is actually going to charge a ridiculous amount of money, or Rockstar is going to charge a ridiculous amount of money for that game. I think it's going to be close to $100 a copy. And they can honestly charge whatever they want because people are going to buy it. So they could have multiple options. And it's probably going to, just like Microsoft Flight Simulator, honestly, where you get a starting price of like, actually, that's a really good example. If we just look at Microsoft Flight Sim 2024, the starting price for this game is not cheap, even for just the standard version. Let's go to Best Buy. And let's go find the standard version. It's $70 for Microsoft Flight Sim 2024 for the base version of the game. This is a change from what we normally see with video games, where you expect $49.99 or more commonly $59.99 these days. $69.99. That's $70 starting price for Microsoft Flight Sim. But then, of course, you have options of getting like a premium version or whatever they want to label it as, where you get more things included from the start. So you have a $130 option, and then you have a $200 option. And I think that's going to be very similar to what Grand Theft Auto does, or Rockstar does with Grand Theft Auto 6. I think you're going to have a very high starting price for the game of $69.99 or $79.99, actually. And then there's probably going to be, honestly, I would not even be surprised if it was like $100. People would pay $99.99 for sure. But then there's going to be either versions that are more expensive, or they're going to have DLC available pretty close to upfront to really just capitalize on the momentum and the interest. And for all of those things combined, you've got the best-selling game of all time. Rockstar's already acknowledged the fact that they think that game should be priced based on the amount of content that you're getting and not just a flat rate. Oh boy. So everything's pointing towards them just really milking this for all it's worth as far as money's concerned. So yeah, I think because of the profit from this game, I think that Take-Two Interactive's valuation is going to move up. Now, they are pretty high valued right now, so I don't think it's going to be like a crazy move necessarily, but it could be pretty positive. And you can already see from the price action here, they are trending already to the upside, and this looks like it's gearing up for another move to break through 207 and set new highs. I think that will actually happen within the next few months. So anyway, all systems green for Take-Two Interactive, and I think also, you know, with Red Dead and everything else they've got going on, they are really set to do well here. So that's take two. And the last one I'll talk about in this particular segment is going to be our beloved Tesla. But before I go there, actually, I want to see what Lucid's doing really quick. Have they bounced at all? Lucid's doing okay. You know, I actually plan to buy like a call option on Lucid for 2027 because their price on their stock right here is so low because people are so scared about what's going to happen to them. I mean, their all-time low here was $2.01 and we're at $2.30 now. But their all-time high was $55 and it's hit around that price twice. And this is one of those almost like gambles, but if you believe that they have it in them to stay afloat and they'll recover at all, even if they just get back to where they were trending like last year, you know, that's 2x or 3x, 4x, or where they were the year before, that's potentially 5, 6, 7, 8x. And if you're doing an option with good Greeks, then, you know, it's multiplied further than that. So I don't prefer Lucid over Tesla. I do acknowledge, though, they have some really good cars. The problem is Tesla's just so far ahead as far as the software is concerned. Tesla's really a software company that makes great cars. Lucid's making a great car with mediocre software, and they don't have any charging infrastructure. So they do not have really a strong, really any advantage, except for the fact that their performance vehicles are competitive to Tesla's and in ways better, and also the vehicles are more luxurious. So if you're just looking for a high performance luxurious EV, Lucid's probably better, but the software is a downside. Regardless, I like the company and I think they have it in them to hold. So I think, you know, if after this fear point they can really start to come up with some good news in like maybe mid 2025, if with the EV credit being removed from their use, their disposal, if they're able to still show that they can stay afloat and sell vehicles, I do think this is going to bounce back to at least $5. So once I free up some capital from selling something else, maybe Archer, once I feel like we've topped out short term, then I do plan to not only increase my Tesla holdings, but buy maybe some cheap options if they exist. And while we're here, I guess we can glance at them. Hey, J-Dog, what's going on? Do I own a Tesla car? Yes, I own a Tesla. I have a 2023 Model 3. Love that car. Great car. Yeah, and I, you know, because I have a Challenger, a Dodge Challenger Hellcat, and it's a 6-speed manual, and that was, you know, I've always been a car enthusiast, especially performance car enthusiast, and I had no interest in electric vehicles whatsoever at all. Tesla is really the company that changed that for me, and it was not the car itself that caught my eye, it was just the technology and the software, because I'm a techie and I love software. I used to be super into like building computers and smartphones and tablets and Android and customizing stuff, and it just really caught my attention from the technology perspective, all the things that you could do in a Tesla, all from just like a tablet screen, and the car driving itself and all the automation features and other features that the vehicle has, and the fact that there was like an app and you control the car from your phone just looked very, very interesting. So I ended up buying one, not thinking I would really like it, but I found a good deal on it, so I was like, really, it seemed like a win-win opportunity, and now it's probably my favorite car that exists. I think you don't really understand unless you own one and you drive one, just the convenience, and I mean, it's such a simple car, but it's the performance, especially to be a vehicle as cheap as what it is, especially if you grab one used, which you can find a used Tesla, like a 2022 or 2021 Model 3 with only like 30,000, 40,000 miles. You can find one for like almost 20,000 flat. in almost perfect condition, which there is no car that I can think of that you can buy that is of that caliber or of that quality that is anywhere near that cost. So it's worth buying one? Absolutely. Absolutely. That's like the one car I will recommend to anyone. No bias. Whoops. No bias from me. I'm not saying that because I'm a fanboy, because I'm really not. I acknowledge whatever the best product is. It doesn't matter which side that's on. I used to be an Android fan. Now I'm an Apple fan because I think Apple's doing better. Yes, absolutely worth buying one. Now, I will say from my own experience, either take advantage of a really good promo or buy a used one. So if you're going to buy new, I would do so soon while the EV tax credit still exists. And the way that works is you get a $7,500 tax credit, and that credit essentially is the removal of the amount of taxes that you would have owed the government. So if you don't work for yourself, for example, let's just say you work for a company and you know that they take a certain amount of taxes out of each one of your paychecks, and then once the new year starts and you file your taxes, it's then calculated to see how much of that amount did you actually owe, and anything you did not owe, what you technically, I guess, overpaid, gets refunded to you. But there's still the amount that didn't get refunded to you, right? And that's the amount that you technically owed. So that $7,500 credit directly applies towards that amount. So let's just say you had technically owed $7,500, and your company that you work for took $10,000 out of your checks over the course of a year. Well, your refund is going to be $2,500, and the $7,500 that you actually owed gets, the government continues to hold that. Well, that credit, since it's $7,500, means that you would actually get that money back as well on your tax return. So instead of a $2,500 return, you'd get a $10,000 return. Crazy. But you do have to just make sure, if you're going to use that as a reason to buy the vehicle, make sure that you actually owed $7,500, because it's not going to give you a credit for more than you did owe. If you only owed $1,000, then you're only getting $1,000. Hopefully that's not too confusing. And so if you can't take advantage of that, I would not buy new, only because, or maybe if you do decide still to buy new, also do so before the end of the year. So where you can take advantage of one of Tesla's current promotions, where you can get very little to no interest financing. They're offering 0 APR on like the 36-month loan with a down payment. And then you can get like 1.9% or 2.9% on the more common loans, which is very good. So either take advantage of the credit and those low APR rates, or buy used, just so you avoid the depreciation. Because Tesla, it's not just depreciation. You have to keep in mind, Tesla's very aggressive as a company, and they're constantly trying to look for ways to lower the cost of their vehicles. So you might buy one at $40,000, for example, and then Tesla might drop the price the next year to $35K, and so your car automatically just depreciated a little bit more because they made the cost a little more competitive. So you have to keep all those things in mind. Buying used, you can find a Model 3 that's like 2022. Like I said, 30, 40, 50,000 miles, which is still great as long as it was treated okay, for like 20,000 flat, and that's probably going to be financially wiser. How long have I been investing in trading for? I've been doing this for... That's a good question. Maybe 7-8 years, but more seriously over the last 5-6. Yeah, quite some time. And I've made tons of money, and I've also lost tons. And it's just from doing stupid stuff and learning by making my own mistakes over the course of time. So now I have a pretty good idea of what to do and what not to do. So, looking at this Lucid call here, this is 2027. And I really prefer, because I'm not trying to gamble, I'm trying to make a play that's going to make me a lot of money and there be a 99% chance that I do make that money. And if I'm wrong, it's where I lose the least amount of money possible. Because my goal again is to get this account to 100 times what it is right now by, within the next year, year and a half, ideally. That's not going to be easy. So trying to cut out mistakes and really cut losses. The first thing I want to do here, look at the share price, which is $2.30. The premium is $146 for a call option that's 2 years down the road. I don't love that because at this point you're not really leveraging anything, because you're essentially saying to buy 100 options at $2 strike price, you're going to pay $146 a share when I could just buy the shares for $2.30 a share. So that's not really that much better. Overall, though, am I a green trader profit? Yes, now I am. But it took a very long time to get there because, even at first I was able to figure out ways to be in the green and make a lot of money quick, like I was saying, but then also not knowing what I was doing and being greedy at times, just all-inning on things when I shouldn't, or buying options, not understanding how all the Greeks worked and the expiry and the theta time decay, and just YOLOing into stuff, and then they expire worthless and then all your money's gone. That's happened plenty of times. So but yes, as of now, definitely green. Now this option, that's the first thing I see that I don't like. But the thing to note is the Greeks here. So for every dollar that this goes up from now on, so if we get to 330, the premium here is going to go from, it's going to go up by 0.82. So this will then be worth about 228 if this goes up $1, which is 50% increase. And 82 is a little over 50% of 146. So technically, and then for every dollar beyond that, this does go up by another 6 cents. So that's good. But what I don't like is, actually that's the wrong number. Okay, theta is actually not bad, because that's less than 1/100th of a cent. I'm sorry, less than 1/10 of a cent per day. So this is a thought, but the leverage here isn't super strong. Just trying to do some quick math in my head. Yeah, I think, so if this goes up $1 and you bought shares, you would be up about, we'll just say 45%. But if this goes up $1 and you bought options, 82 is like, we'll just say 60% of 146. So you'll have made a little bit more. Your account will be up 60% instead of 40%. But the thing is, over time, you're going to be losing money if you're not correct. So for an extra 20%, I don't know if the risk of losing all your money at expiry and only getting an extra 20% gain if you're correct is worth an extra, again, 20% if you're correct. So, and just losing money on this over time if it doesn't happen fast enough. So I don't like this option. There's not enough leverage there. If you go up to one of the cheaper ones, a 2.5 strike, 77 is again about 60-ish, 65%, I guess, of 130. That goes up by 8 cents for every dollar. Theta is the same. I'd actually prefer this one. This makes a little more sense. $3. That's pretty good compared to that. I like that number as well. Theta is about the same. I like the $3 call. Now, I'm the more in the money you go or out of the money you go, usually the less you're going to make with this delta. So for every dollar that the current price of the stock goes up, so Lucid's 230 right now. So this delta is saying that if for every dollar it goes up from what it is right now, so if it goes from 230 to 330, the premium is going to go up in value by this amount, which is 65 cents. So this becomes 165. That's what you could sell it for if Lucid goes up to 330. And then also for every dollar that this goes up, this delta number, which is what you make for every dollar the price goes up, increases by 10%. Yes, Alex, thank you. Yes, don't forget, like and subscribe. Appreciate it. So I'm looking at that and just trying to do math, because you want to make sure that you're actually, if you're going to do an option, that there's some benefit over just buying the stock itself. And usually that's going to be leverage, like you're able to buy more shares for less money. So then you can use the remaining money that you saved and either buy a dip with it or buy something else. And if you can't do that, and you're also not going to make more money, then it doesn't make sense to take the risk of buying an option that expires and then you potentially lose your investment. Or that just goes down in time, or over time in value. So this one's not bad either. And this again is, this is out of the money, but we're assuming with this buy that Lucid is going to go up to $4 or $5 minimum. So this will most likely be in the money by 2027 if they're going to survive. I would strongly doubt, if they're going to stay afloat, that the price does not go up by $1 or $2 within the next 2 years. That would be kind of crazy for it to stay at $2 or $3 after 2 years. So 65 to that, obviously that's 65%. Delta gamma number's pretty good. Theta's a little bit higher. I think I preferred this one. Decent amount of leverage, and I'm thinking compared to the stock price, this is less than half the cost. So I can, whatever amount of money I would have been putting in on stocks, I can go double with that here. And getting some pretty good leverage here. 70% gain for every dollar that the underlying goes up, compared to if it goes up $1, that's going to be actually less than 50. It's going to be like a 40% gain from actually holding the stock. And then if it goes up like another $1, then this number gets even higher. It goes from 70% to 80% gain. And the theta time decay is about the same as it is here for an in the money call, which is usually about the lowest you're going to see. So I like that. That checks out to me. So if I was going to take the risk here on a stock, I'd probably go for this one here and hope for the best. So I'm just looking at that now so I can keep that in mind for later. So if I do ever decide, all right, this looks like a buy, I don't have to do that research in the future. What I also like to do is go into a long call calculator to get a visual. And this is some options 101. This becomes very helpful. So you can come in here and put the stock ticker in, get the current price. Once you click that button, I'm going long, I want to buy, and then you can select the option from this list here. So it's a 2027 call I was just looking at, and the strike price was out of the money at it was the 350. And so I'm just going to go looking at the ask price, because I'm trying to be as reasonable as possible. So whatever the most expensive cost would be. And okay, a contract's going to cost me $106. Let's just say I do 20. And so that's going to be a $2,000 investment. I want a good amount of contracts so there's actually a return. And then it's going to calculate all those Greeks, including the theta time decay, and tell you basically what you would profit if, as of what time. So if the price was this and the time was this is what you would be making or losing. So this is very, very useful. So if we say that we expect Lucid by, let's just say, mid 2020, quarter one, going into quarter two 2026. So we'll just say somewhere around March, April of 2026. This is 2025. Right, and then this is 2026. So right around here, if we expect it to be $4 minimum, then off a $2,000 investment, we would make $1,000 profit. So that's a 50% gain. Now, if we made this sooner, you can see here that we would make up to double that amount of money, if not a little more. But the reason that this number decreases is because that theta number, which indicates how much value the contract itself just loses over time, the more you hold it and get closer to the expiration date. So that's why this curve happens. So I would like to see more money than that. Now, if you're kind of bullish on Lucid and you think that the price really is not just going to double, but that it's going to go up kind of much beyond that and get back to, let's just say, the high of, let's just say it gets back to $12, which is what it was January 2023. So somehow they turn things around within the next 2 years and they get back to $12. Then I'm just going to edit the stock price range here, and let's just make the range 15. So I'm looking at, and the minimum should be lower than 230 because it could go down. So we're going to say $1, which is the minimum it's going to be if it's listed on the stock market before it gets delisted. And so if you're thinking we could go from like here to here, there's a lot more upside potential, obviously. And if it went to, let's just say $10, then, I mean, this is a $2,000 investment and then a $10,000, $11,000 gain. So that's pretty nice. Or even if it got back to 12, you can make $15,000 off of a 2,000 investment. And that's even if it expires, you know, if January 2027 comes. So I do like the way that sounds. Or even being a little more reasonable, Lucid gets from $6 to $8. You can make about 4 to 8,000, just depends. So it's not a bad idea or thought. Maybe it is a bad idea. It's not a bad play, but you have to make sure it's a good idea. And so with this, I would probably look to not buy 20 contracts. Maybe I'd just buy 10 to start with, being that there's a lot of uncertainty and I really would prefer not to lose 2,000. 1,000's, I can risk that and cut it. If I lose half of that, that would be okay. But I probably wouldn't go for another 10 plus contracts for my account size currently until I knew for sure that there was some positive news. Because if they go under, I don't want to just be holding and throw $2,000 in the trash can. So that's that. Going to wrap up here. I do need to close out the stream. So this will be the last thing we talk about here. And that's going to be our beloved Tesla. Tesla's been moving, all right? And after hours, keep in mind, this is where we closed at on Friday at about 4 p.m. The market's closed at 389. And in the aftermarket and going into the weekend, Tesla's just been creeping up on its own, off no real news or anything. And it's making its way towards the $400 resistance mark, off very little volume. That's absolutely worth noting. And we'll come back to this Dogecoin thing in a moment, because that's interesting. All right, but you can just see here, look at all this volume and how this, I guess volume did kick up, but all this momentum. And the markets aren't even open here in the US. So that's quite interesting, isn't it? And Tesla, I really think, obviously the valuation here is high. And if you compared their company's value to did not mean to close this window. If you look at Tesla's market cap right now, they are creeping up. Not too long ago, and by that I mean a month or two ago, they were worth about 700 billion, and now they're at 1.2 trillion, and they're in the top 10 most valuable companies in the world at number 8. getting very close to Meta / Facebook, and only like 25% away from Google, and about 50-ish% away from Amazon. So they're really getting up there in value. That being said, though, I really don't think that Tesla's anywhere near its top. I think here, I mean, if we just zoom out and look at a longer term time frame, you can see here, very massive double bottom, very bullish look there. We're heading right back to our all-time highs, and we are, you can see here that $400 actually did provide some resistance. So once we hit that level, we're going to need to just look and see what happens. We're very close. We're about $10 off. Oh, I'm sorry, $4 off in the after hours market. But then our all-time high, we spiked at about 414, which is right above that. And if we clear that level, there is no resistance to reference. This is our all-time price chart. So we clear 414. There's going to be a lot of people that take note, and we're going to probably see some breakout momentum to the upside. Very positive. And I think beyond that, this is old from before the stock split, so don't look at that. This was from many, many years ago. So let me delete this. I think once we clear 400, the only obvious level is going to be the mental resistance, which is going to be a significant number, which is $500. That's halfway between 0 and 1,000. That's the next significant big number that people are going to be eyeballing when there's no real levels to plot on their chart. And they're going to be thinking, oh, can we hit or exceed 500? So then we've got, at that point, all that room to play with between 414, 415, and $500. And then once we pass that, people are going to start thinking 750, and they're going to start thinking 1,000. Those are the next big mental numbers. Now, that's what people are going to be thinking, but you can't just go off of that, because there's going to be a lot of investors that actually do fundamental analysis, and they consider the valuation of the company, and that's going to be due to revenue that Tesla brings in, how many vehicles are being sold, how are they following through on their promises as far as hitting time deadlines, how are sales going of vehicles, so on and so forth. But I think some of that gets eliminated because a lot of investors are not people that do analysis like that. They are people that buy off of hype. And that's why people have had such a difficult time trying to go short on Tesla, because it just does not move like your typical, like Microsoft might or Apple might, because the investors, it's a different group of people. These people are passionate about the product. They're passionate about the company. A lot of them are fans of Elon Musk, and they're just passionate about things that he's passionate about. And for that reason, they are always bullish, and they always have a positive bullish outlook, no matter how things might look. So this is going to tend to trend to the upside. But then you also just keep in mind, Tesla, with the robo-taxis coming in 2027, Elon Musk's direct affiliation and relationship with the government, and what that role that it's going to play in regulations, not presenting as much of a roadblock as people expected for full autonomy. With that in mind, the rollout of full autonomous, the whole robo-taxi rideshare network that comes as a result of that, the revenue that gets generated as a result of that, and then what people don't usually talk about, and that's going to be the licensing of full autonomous software and potentially hardware 4 or 5 package to other vehicle manufacturers, because there's really no one close to Tesla when it comes to autonomous. So having been on the road for this long, having gathered certain amounts of data, which is going to be a lot of the things that the government's going to look at when it comes to allowing a company to really have this software usable on the road by everyone here. It's going to be, well, how have you proven that it's safe? Where's the data? And so Tesla, having all these vehicles that already have self-driving software, where they've already been gathering data from years as far as cancellations, and that's why you get the metric of intervention per mile that they use, critical interventions per mile. How often did FSD run into situations where, due to a hazard, it had to be canceled? How much safer is it than a human driver? What's the chance of an accident? What's the chance of a fatal accident? All that data being collected, even currently with FSD beta, or supervised, I guess you could say. No other company really is at that level. It would take them years to catch up and get all that data. So even if they had the capable software now, it's not just about that. So I think what's going to end up happening is, once the regulations are in place and then Tesla's FSD software is approved to be fully autonomous, no human intervention needed, that companies, since they're not going to be able to compete, and they don't want their car to be so significantly less appealing compared to another one you can buy that's maybe a similar price but doesn't have the ability to drive itself, that Tesla's going to end up licensing that feature and offering it, just like they do with the supercharger network. They're going to allow other companies' vehicles to take advantage of that at a cost that's going to benefit Tesla. And maybe that just comes with the hardware suite, which is going to be ensuring you have just a powerful enough CPU, GPU in the computer to run the software, and then the very simple and relatively straightforward 4 cameras that the Teslas use now. And then there will be just some small amounts of data that needs to be input to calibrate the vehicle's dimensions and whatnot. And I think from there, you've got yourself a product. But I think that's going to be a pretty significant revenue generator for Tesla as well, that no one's even thinking about, among many other things. So that's why, my primary position is in Tesla. I'm long Tesla. I'm doing calls right now for leverage. I plan to buy more once the opportunity presents itself. But my challenge right now is to grow this account to what I want it to be without just adding money to it. Just doing the right thing. And I'm documenting that as it happens. And so far, we're up significantly. Over the last 3 months only, we are up 142%. And you can see it says here we're at 16,662. And that's a almost $10,000 gain compared to where we were at that point. So we've made 10 grand in 3 months off of 5 or about 6 grand. So doing well. And I'm not touching any of this, by the way. This is solely for the purpose of growing this account. I don't even look at that as my money because I can't use it, so it doesn't really matter. Right. Aside from that, I will, I guess, say that valuations with all of that in mind, and there's more to that, but I will save some for what's going on, Dakota Craft. Ace Archer calls and puts. Yeah, let me touch on that just for a minute here because I'm over time. But I will just say my Tesla price targets, because of that and other things, is I don't see a cap on Tesla's potential. That's just one thing. You also have to consider the Optimus robot, which the goal is to get that in every home. I think, you think, $30,000-$40,000 for a bot. Like, who's going to buy that? People buy cars that are $30,000-$40,000 because they find it to be a necessity and they see the value and they just figure out ways to afford it. Same with other things that are expensive. And I think it's going to be the same. If Tesla can figure out a way to make it appealing to the everyday person who is not necessarily rich, but can afford to take on another expense, they can, just like they do with financing their vehicles, offer a really, really promising incentive, like a 0% APR loan, for example, over the course of 5 to 10 years, especially if these bots are going to be made to last for 20, for example, where you know that they're not going to lose value, their resale value is going to be high, and there's not going to be, there's good warranties or whatever. You're going to have it for a while. It's a good investment. You can sell it for pretty much cost if you need the money back and you need to get out because of demand and value and whatnot. I think it's very, very possible that these could be in more hands than people consider, especially if right away they can start saving that person money. So they can do things like mow your lawn. Then you can get rid of your lawn care service, and that saves you $35 or $40 or $50 or $20 a week, whatever you pay. that automatically gets counted towards, you take that amount right off your monthly payment minus the amount saved by having the bot itself. And then it starts to become neutral, break even, and then maybe you end up saving more money than you spend. Really have to see what the bot can do. But if that ends up in anywhere near every household, that's obviously significant amounts of money being made, even more so than probably even more of a catalyst than their whole entire car business. And so what does that do to the stock price and the valuation of the company today? Is that triple, quadruple, 5x the current $400 valuation? Because you got to consider, what's Tesla's market share right now? If we just say hypothetically that every family in the US right now has a vehicle, which I know it's not everyone, but let's just say there's one per household. What's Tesla's share of that vehicle market? Not just EV, but total. It's not very high. Is this 4.2%? This isn't the number I'm looking for. Obviously, they don't have 50% of the market, but okay. So that's of EVs. So they've got about 50%, 50 to 60% of the EV market, but of the total market, they've got about 4%. And we say with 4% of the market that they're worth about $400 a share right now. But imagine if they get 100% of the market, or close to that. Every single household in the US, or close to that, has a bot that's about the price of a Tesla vehicle. Obviously, crazy things happen to the stock price. And again, we're just talking about individual things themselves. One thing that we're talking about is autonomous, just the software. We haven't even really talked about the sales of the Cybercab vehicle itself. We have not talked about money being generated from the supercharger network and everything from that. We're also individually talking about how the stock price could move from the robot. We haven't talked about commercial use of any of that stuff. We have not even begun to talk about the semi-truck, which obviously we know that the largest expense for that whole freight transportation industry is, number one, it's the labor of paying your driver. Number two, it's the vehicle cost per mile. You have to factor in vehicle maintenance cost and fuel cost. So with the Tesla Semi, one, little to no maintenance. Two, no fuel costs really. It's going to be significantly more expensive, significantly cheaper to use electricity compared to gas. And then the longevity of the vehicle, we talk about maintenance, but the repairs, that's probably going to be very beneficial to have the EV Semi for that. And then autonomous, eventually, and hate to say it for any truckers, but eventually those are going to be full autonomous as well. So that's going to be the number one highest demand semi truck. Every trucking company is going to want to have the Semi because of the amount of money that they're going to save and how that's going to add to their profits. We have not even talked about that effect on the stock price, and they're, I think, ramping that up in 2025. They've got the new supercharging stations, the V4 superchargers that they're now talking about, which supports like 1,000 watt or 1,000 volt fast charging for the semis specifically. See this? Up to 1.2 millivolt or milliwatt supercharging for the semi vehicles. So we have not even talked about any of that. That's why I'm long Tesla, and there is no plan to go short or take profit really and not buy back in. Nothing. We're not even scratching the surface. I think we'll look, you know, years from now, and this stock price will be at least 10 times what it is right now. So I will hold my call. On this, I have one contract because Tesla calls are very expensive, but I have the 2025 April 17th call. Total return on that, I'm up almost 4,000 as of today on this one call, which is 62% gain. So doing pretty good on that. And I just plan to try and sell at a top on that call option, and then, you know, on a dip is when I'm just going to buy back in, either with shares or another option for a later expiry. But I'm planning to stay long. Okay, and finally, Archer. There's more to talk about there, but that'll be all for today. Archer calls and puts. Yes, I had puts first because of the December, and these were cheap, but December 20th, they're planning to announce or have a special meeting with shareholders to pass a vote to see if they can add, basically double the amount of shares that they have at their disposal to do offerings with if they want to. And that's not a great concept, because that just means if it gets approved, then they're going to be able to dilute even more shareholders. So that's a bearish conversation. That's why I bought puts. But nobody seemed to care about that. Also, nobody's talking about it. I don't know how many people actually know about it. And that was back when we were at about $5. And now we're, you know, we hit 10 on Archer. So, you know, I pivoted quickly. I got good calls, and I'm up pretty good on the calls, I believe. Oh no, we're about break even because I bought them when we were let's see, I think we were at about $7.90 per share when I bought the call to go long here. Now we're at $8.26, so I'm up just a little bit, up $50 overall, which is not, that's like 1%. But this was not my first call. Actually, I've made thousands off of Archer calls prior to that. This was a new call that I got. Before that, I actually had, before this January 2027 call, I had a April 17th expiry call for 2025 and made a good amount off that. I think I bought that one when we were at about $4 and I sold it at $7.50. So yeah, that was really good. This call's new, but I'm just going to hold this call, this other one. If you compare, this is a $5,000 investment here on the long side, but here on the puts, even though I have 28 contracts, these were cheap. This is only about $300. It's less than that or so. So even if these expire, I mean, they're worth nothing anyway, but if they expire as they are, nothing changes. So yeah, but if we do sell off pretty hard, and this is why I'm really just holding these, because I did have a little opportunity to sell at 8 cents a couple days ago, but if this pulls back, as we get closer to December 20th, because that news starts to circulate that conversation's being held and people end up flipping bearish or taking profit or going short, whatever, then this might end up actually making a couple dollars or getting back to break even. So there's no reason to try and get rid of it right now. That's why I have both. Playing off the volatility right now, just doing what I need to do. And then Dakota says, got the March 385 call. Nice. Bought it just before it broke out after he got his pay tonight. Good stuff. Very, very good. I'm sure. Yeah, I think us Tesla longs will have a very bright future ahead of us. I'm banking on Tesla being the driver of the profit on this account. But like I shared over the course of the stream, I've got a few other things up my sleeve that we'll continue to talk about. But my goal is to grow this account as quickly as possible without making any significant mistakes that are going to cause this to pull back significantly. So far we're doing very, very well. Like I said, very well. This was November the 4th, actually. We were at 4,000 here, and now we're at 16 in a month. So doing good. All right, guys, that's going to wrap it up. Don't forget, subscribe to the channel if you have not already. If you're watching this on X, you can go see my YouTube channel. Find me at Meet Mariano. And then on X, Follow me there for more frequent updates and notifications and everything. And my handle there is Mariano on X. So appreciate all the support. And I'll be back live most likely sometime over the next 7 days to discuss some more stuff related to the market. Have a great night, and we'll see you then. By the way, these are, again, underrated.